Hey there, it's Rob Folia, author of Real Estate Reset and of Folia Properties at Keller Williams Realty here in Nashville. And I'm coming to you today because I've been approached about this subject a couple of times here over the last couple of weeks, and I figured it'd be worth doing a bonus video this month. And that is, let's answer the question of does buying an investment property make sense in 2024? Now, before I go any further, if you get value from this content, or if you want to just continue to see real estate updates of Middle Tennessee, or if maybe you're a real estate agent and you want to keep tabs on what people are doing that's outside of the box in our industry, make sure to hit that like and subscribe and follow button. That way we can stay in touch. But let's get back to the topic of this video, and that is, does buying an investment property make sense in 2024? Now, let me be clear before I continue that we're talking about purchasing an investment property with a mortgage right now. So we're not talking about cash buyers. We're not talking about turning your home into an investment property. That's going to be those are whole other topics, complete other topics. Because what we're gonna dive into is the numbers. We're gonna dive into the numbers of purchasing an investment and what that looks like in today's market. So I've got a few things pulled up here. Let's go ahead and start with sharing my screen with y'all so you can see exactly what we are taking a look at. And let's just dive right in. So the very first step is finding a potential investment property. Now that can take a few minutes, and to save y'all time in a video, I pulled up something that is that I think makes sense. Now you can use my website foliaproperties.com to search. You can use the local MLS realtracks.com. I found something in an area that I personally like to invest in. Clarksville, just a little outside of Nashville. The cash flow has always made sense. My wife and I, we own a couple of properties just a stone's throw away from this example property that I've got pulled up. I'm very familiar with the market right there. They're great rentals. Knock on wood. Whenever there's turnover, we find new tenants right away, or I should say, my amazing property manager finds them right away. And I just think they make sense. They work. So I found something here that's on the surface very similar to what we own already. 3 bed, 2 bath, around the same size, 1,236 square feet. It's got a garage, right around the same age, close to 20 years old. So let's just dive right in. And before we look at anything like, and it's been on the market 2 weeks, just from keeping tabs on the market, I can tell you, and keeping tabs on my investment properties, this is priced about right. $270,000. Now, also, before I forget, shout out to Veteran Realty Services. Thank you so much for putting this listing on the MLS. Just wanting to take a look, but I want to make sure I give them proper credit for this is their listing, not mine. And $270,000 for a home like this, just from everything I've seen over the years, it makes sense for this property. Now, let's just scroll through a handful of pictures. In fact, let's just pull up a gallery so you can get a rough idea. I mean, it looks like it's got, some sort of laminate flooring, maybe luxury vinyl plank. I don't want to spend too much time in this video looking through a description, but it's as you can see, it's in good shape. It looks to be move-in ready. Fresh paint. Nothing extravagant, no extravagant upgrades, but it looks like it's in fine shape. Some of the mismatched appliances, but as long as they work for a rental, especially a rental of kind of this budget, that tends to work. Nice flat yard. It's partially fenced in. Actually, it looks like the entire yard is fenced in because it looks like there's a link back there. So fenced in yard, which can be a bonus in this area too. So priced at $270,000. That seems to be about right, from what I've seen. We'll play the hypothetical game and talk about how potentially that maybe some negotiation could play into your favor and how that works in a payment here in just a moment. But just say this is the type of investment property you're looking for. You're looking for a 3 bed, 2 bath in a suburban area in Clarksville. Like, to me, this is a great rental. This type of rental made a ton of sense when my wife and I purchased the couple of properties we own in this area. A couple of years ago. Now, rates were lower, numbers were around the same. The property values were in the mid 200s for a property like this. And but it made sense. Like, we could purchase a property at that time and expect it to rent out. Like this property right here, when we purchased one similar, I believe we started renting it out for around $1,550 a month. Now it's gone up a little since then. We'll talk about that in a moment. But we were renting it out for about $1,550 a month, and the mortgage payment, everything after putting 20 or 25% down, was around $1,100 a month. It made sense Does everything make sense right now? We got to answer that question. So we're going to use the mortgage calculator here on my website. We're going to fill in some numbers here in a moment. And one thing we're going to take a look at is interest rates. If you're familiar with any of my videos, you know that the reality is interest rates have kind of plateaued this year and been pretty steady. I don't know if plateau is the right word, but they've been pretty steady around 7% for an owner occupant. That's what we're looking at right here. 30-year fixed rate mortgage, freddiemac.com. It's the week ending last Thursday, 7/3, or I guess it was last Wednesday is when they reported it. It was right around 7%. You can see here there have been slight fluctuations up and down. Right around 7% is been the norm in 2024 for a 30-year fixed rate mortgage. Now, spoiler alert, when you're getting an investment property, you're not getting the same rate as an owner occupant. The reality is it's seen as a higher risk for a lender, even though if you're buying an investment, you're putting likely 25% or more down. It's seen as higher risk because if the bleep hit the fan and all in your life is crumbling down, that investment is not going to be a priority to you. Your home, your roof over your head, that's going to be a priority to you, but your investment might not be. And so it's seen as a higher risk. It's not an insanely higher rate, but usually about 1% or more, maybe a little bit more for 30-year fixed rate investment property, a 1% increase, I should say, from what you see for an owner occupant. That's about the norm. So let's just say an investment rate right now would be 8%. Now, again, I'm not a lender, so don't quote me on that, but let's just say it was 8%. Let's just say you got this property at 270, and let's just say you put 25% down, because I do think that's very advisable right now in today's market, putting that down instead of 20%. If you're buying an investment, you can't do it with less than 20. There's no loophole, no magic program out there, at least that I know of. If you know of one, feel free to drop it in the comments. Let me know. I'd love to find out about it, but I don't know of a single pure investment property loan that's out there with less than 20% down. In fact, after COVID hit, I think most lenders are now just doing 25%, which is why I'm leaving it at this. Interest rate 8%. Property taxes. What were the taxes on this property? 1647 per year. So let's fill in the actual number. PMI, since you're putting that much down, you're not going to have any mortgage insurance. Home insurance, I'll put it at about 100 a month. Let's just put 1,200 a year for homeowners insurance. There's no monthly HOA. So we have everything correct here. 270, 25% down, 8% rate, taxes, insurance, all the same. You're at 1723 a month right now. Now, how does that equate to your what you're going to get for rent? Now, I've got a few things pulled up, and let's just take a look at them. Now, before I even dive into them, please know that this is a very quickie, rental market CMA that I'm about to run. Just a couple of sources that I have. I'm going to tell you what we're experiencing too, and what my property manager has told us about a property that is very similar to this. And yet, and just know that these are a couple of things that I use to off the cuff start identifying, does an investment property work. One, for all its faults, I find Zillow actually kind of makes sense from their rent zestimate right here. It's normally pretty close, within about $100 or so, which I know that can make or break a deal, $100 a month for a rental property. And yet just know it's going to be pretty close normally. So they're quoting 1650 a month. The other one that I really like is rentometer.com. I know they've got a paid service. I don't subscribe to them. I don't use it enough to have to subscribe, to be honest with you. I think they do a few free ones a month. I never even have signed in, so I don't know if they, how they track that, if it's IP address or what. So just know if you're playing around and you plug in a handful of these, at some point it's going to tell you, hey, you got to sign something. You got to sign up for it. But anyway, what it's telling me right here, after I plugged everything in, the address, it's going to ask how many bedrooms, and if you have at least 1.5 baths, because that's basically their threshold, 1 bath or more than that. What the average is, the median, lowest percentile, and the highest percentile. Now you can see right here, I like to work off of these top two numbers at the very beginning. And you can see the median and the average 1750, 1790 a month. So very close to what Zillow was saying, a little bit higher than what Zillow was saying. We'll call it, just for easy math, we'll call it 1750. Again, you can call it higher than that if you wanted to. And when something would be on this higher percentile would be If this was a little bit larger, because they didn't, rentometer doesn't necessarily ask for what your square footage is. If this was a 1,600 square foot home in this neighborhood, we're going to go higher on that range. Not a ton higher, to be honest with you. It's not like when you're selling a home and you're getting a price per square foot for rental. I mean, there might be a little bit to it, but it's just not the exact same. Also, it might be a little higher on that range if the finishes were a little bit nicer. Like, again, this is fine. This is move-in ready. If we were in the market for an investment property today, this would be something I would consider. I mean, the numbers would have to make sense, especially when I'm seeing stuff like this roof looks like it might be a little on the old side. I'd have to look into it some more, obviously. Um, but the finishes are nice. At least the photographs well. It'd be worth a tour. It'd definitely be worth a tour if I was in the market for something like this, at least on the surface. But if the finishes were a little nicer, maybe we'd be on the higher end, closer to the 75th percentile. Maybe instead of 1750 a month, 18, maybe even a hair above that. But still, we're going to call this 1750 a month. I think that's a good number to use. It's the median that Rentometer is giving. It's within about $100 of what Zillow's saying. And just to be honest with you, it's about what my property manager quotes us on a home that's just like this. Like we just turned over 3 units in Clarksville, 3 personal units that a manager of ours has, that we trust him with it, and two were 2 sides of a duplex, and so not the same as this, but the other was almost identical to this property, and that's what we're going to get, 1750 a month, and so it's worth, I think, using that in our calculations. And so you can see right here, if you're planning to get 1750 a month, and you're going to be having to pay just off the top principal, interest, mortgage, and insurance. You're going to have to pay 1723 a month. Gosh, I'm going to personally say no. That doesn't make sense to buy right now. Now, you can answer that. You can definitely answer that for yourself. And obviously, like I said at the beginning of the video, maybe if you get a better deal on the property, maybe if you get it for 260, if I could type the numbers right, 260, and you're putting 25% down, well, now your loan amount's less. You're at 1668 a month, so you're getting closer to $100 a month in profit. Maybe it starts to make a little bit more sense. Now, granted, we haven't talked about any other expenses for this property. We haven't talked about, having a property manager manage it for you, assuming you're not self-managing it. Most of those charge about 10% of your gross rents. We haven't talked about having a rainy day fund for if and when you have to turn over a unit, or you have an HVAC unit go out, or your water heater bursts, or a tornado, knock on wood, that does not happen again in Clarksville, but a tornado comes through and you have an insurance deductible that you have to meet. There's so much that could happen when you own a rental property, and it's worth bringing up because recently I was reminded of a past client that actually I passed on, but somebody I told, hey, I can't help you, that a lender friend of mine had gotten me connected with, and he was telling me about what transpired with this person. And long story short, this person was so like ramped up to buy an investment property that he bought something that was negative $300 a month. And by the time they were getting to the closing table, this buyer, this I'm going to use the term loosely, investor, because to me that's an awful investment. But this investor was, not wanting to buy it anymore. Now, legally, he had to, because he had entered into a contract, but he was going to lose money every single month on this investment, and this investor did not want to purchase it anymore. And I would make the case that if you were buying a property like this to invest in, and again, nice property, a great investment property potentially, but at the way the numbers sit today, this would be a swing and a miss. This would not work for most investors putting that money down. Now, again, this has to do with if you have a mortgage, if you're buying it today with rates as they currently sit, just how everything looks. If you own something, let's just say you own this home and you were looking to rent it out, you've got to run your own numbers for that. You've got to look and see, all right, well, if I'm planning to get, 1750 a month in rent, and say your mortgage is $1,200 a month because you bought it a few years ago, your rate's low, your balance is a lot lower. it might make perfect sense to rent this out. There's nothing wrong with that. In fact, as I made no secret, I love rental properties, and I think this is it's a great way to grow your wealth. But purchasing it today, man, I'd really have to think long and hard on it, because even if you're putting more down, like let's just say you did get it for 260, and instead of putting 25% down, say you had a large down payment, you inherited some money, you've got $100,000 to put down. That's close to 40%. You're still at 1411 a month. Now I don't have I just because I had a feeling the numbers were going to go this way. I don't have my whole spreadsheet pulled up to where I can just plug in some things. But if you're at 1750 a month, and try to walk through the numbers with me real quick, and you've got a property manager who's managing it for you, well, off the top there, you're at almost $200 less. So you're at 1575 a month that you're going to bring in, and your mortgage is 1411. So you're going to make $150 a month, 160 a month. You got to ask yourself, does that make sense? Does that build in enough cushion for you to personally feel comfortable with, if a year from now your tenant leaves in the middle of the night and you've got to turn it over, and you've got $4,000 worth of damage from a bad tenant who smoked in the property? They weren't supposed to, but they did, and they tore it up. They had a dog they didn't tell you about, and the place just reeks and smells, and you have to replace everything. Like, and it's gonna, on the cheap end, cost you 4 grand to paint and carpet. You know, are you gonna feel comfortable knowing that it cost you 4 grand to do that, and you made a total profit of like $1,500 that year? I know I wouldn't. And so I want to see more profit than that personally. That's just me. Everybody's going to be different. But just to summarize, because I could ramble on this subject, gosh, just about all day. To summarize here, guys, I've got to say, I think right now might not be the best time to purchase a rental property if you're only putting 25% down. Now, again, this is for one example. And if you're curious, I could make this a series and pull up different types of properties, and we can evaluate them. So if you're looking for that, leave a note in the comments, and I'm happy to do that. Make this a type of series. But those numbers that I just pulled up, that's very typical for our market locally here in Middle Tennessee. In fact, those are good numbers for our market here in Middle Tennessee. If you're looking closer to Nashville, that same home right there could easily run you $400,000, and a mortgage on 400,000, putting 25% down, it's just not gonna bring you the cash flow that you think it's going to bring because of what interest rates have done. That said, every scenario is going to be different, and if you're curious about what the scenario is going to look like for you, just reach out. You can leave a comment. If you're seeing this in your email, just hit the reply button, and I'll respond, and I'm happy to help however I can. But as always, guys, no question is too big or too small. I'm happy to answer them all. Give me a shout. You can always give me a call, 615-238-7578, or you can email me, rob@foliaproperties.com, and look forward to helping however I can. But y'all take care. Stay tuned for more videos. I hope I might make this a series. I'm kind of talking myself into it as the wheels are turning right now up here, as I'm thinking about it. I might make this a series, and just see if we can start finding investments that make sense again. Because I know there's going to be some naysayers in the comment that say I'm thinking negatively about this, and I get that, and I appreciate that. But at the same time, the numbers have to make sense for every investment purchase that you make. And so, again, I'll stop rambling. I appreciate y'all checking out the video. And until next time, guys, it's Rob Folia, author of Real Estate Reset, and I'll see y'all soon.